Hey everyone, welcome back to We Are Cosmic, your go-to channel for understanding cryptocurrency, blockchain, and real opportunities in the finance world. I'm your crypto guide, and today we're diving into something that could be a once-in-a-lifetime moment in blockchain history. If you've been watching the market, you know it's moving fast. But what I'm about to break down with Hedera, HBR, is on a whole new level. Let's start with the big headline. FedEx has officially chosen Hedera over every other competitor. That's huge because it signals real-world adoption from one of the world's largest logistics companies. Why does that matter? Because it shows that Hedera isn't just another blockchain or a crypto experiment, it's becoming core infrastructure for global supply chains. We're talking about systems that move billions of dollars in goods every day, and Hedera is now part of that conversation. To put this into perspective, we're living in a once-in-a-civilization moment. Imagine humanity's trade history. We started with canoes, paper, and clay tablets to track goods. Fast forward thousands of years, and supply chains are now so complex that traditional paper systems just can't keep up. Hedera, with its fast, secure, and trusted distributed ledger, allows companies to digitize this process. Digital supply chains scale when trust scales, and that's exactly what Hedera brings. Now, here's a number that will catch your attention. The HBAR ETFs recently saw seven-figure inflows, totaling around $93 million. On March 3rd alone, the Canary Capital HBAR ETF saw over $1 million in net inflows. That's significant because ETFs represent institutional confidence. Over time, the HBR ETFs have only had one day of net outflows, showing strong demand from investors. Canary Capital alone holds 562 million HBR, meaning a single institutional wallet has immense buying power that could influence the market. This isn't just hype. Hedera is backed by real partnerships and real projects. FedEx joining the Hedera Council means they're helping shape the infrastructure of global shipments. PwC is partnering on enterprise implementations, showing that this is regulatory-grade technology, not just a pilot. The EU is requiring digital product passports by 2027, and Hedera is positioned to power that initiative with their track and trace solution, ensuring compliance for enterprises. That's utility you can see, not just speculation. Here's why this matters to you as an investor or crypto enthusiast. Hedera is being integrated into real-world systems that have actual demand. It's not just a token sitting in wallets, it's powering solutions for large corporations and regulatory frameworks. And when institutions start moving, the price potential can be huge. Imagine being early when a project goes from under 10 cents to adoption by global corporations. This is why I've been buying HBAR under 10 cents and why I encourage you to pay attention. Before we dive deeper in the next parts, I want to hear from you. Are you following HBAR closely, or is this your first deep dive? Drop a comment below, hit the like button if this content brings value, and don't forget to subscribe with the bell turned on. You'll want to be first to know as we cover Hedera's ETF inflows, cross-chain partnerships, Axelar integration, and institutional strategies that are shaping the future of HBAR. First, let's talk numbers. Hedera's ETFs have been making waves. On March 3rd, Canary Capital's HBAR ETF recorded over $1 million in net inflows, part of a total of around $93 million across all HBAR ETFs. That's not small change. These are serious funds moving into the market. What's remarkable is that since the launch of these ETFs, there's only been one day of net outflows back on November 14, 2025, totaling $1.7 million. This tells us two things. Institutional confidence is high, and there's a consistent demand for HBAR as an investment. Imagine this. Canary Capital alone holds 562 million HBAR. That's massive buying power. If institutions start executing long-term strategies or moving capital into Hedera-based projects, the market could see significant upward pressure on prices. This is why smart investors are paying attention, because HBAR isn't just a speculative token, it's backed by institutional adoption and real-world use cases. One major factor driving this confidence is regulation and clear rules of the road. Institutions won't enter a market they don't understand. ETFs give them a regulated, safe way to access HBAR, and that encourages more players to come in. With ETFs, you're not just seeing retail interest, you're seeing professional long-term capital. And when that happens, it can have a huge effect on liquidity and price stability. Now, let's talk about why companies like FedEx are getting involved. They aren't choosing Hedera randomly. The technology allows for trusted digital supply chains, which is a massive leap from traditional paper-based systems. Global supply chains are extremely complex, and companies need reliable systems to track shipments, verify data, and maintain compliance across borders. Hedera provides a neutral, secure infrastructure for these processes. That's a big reason why institutional investors see HBAR as more than just a crypto asset. It's infrastructure for the future. This also ties into ETFs. When a blockchain project shows real-world utility and regulatory alignment, ETFs can launch. And that gives investors a legal, institutional-grade way to invest. It's a feedback loop. More adoption leads to more institutional confidence, which leads to more inflows, which strengthens the network further. Hedera's ETF activity is the first clear signal that this cycle is beginning. Let's also touch on the DTCC, Depository Trust and Clearing Corporation. Hedera is now part of discussions involving tokenized real-world assets, which is huge for institutional finance. This means HBAR could play a role in digital liquidity, settlements, and enterprise-grade applications, potentially linking it to other assets like XRP and XLM in the broader ecosystem. What we're seeing here is Hedera moving from an enterprise-ready blockchain to a market-ready investment. That's a big distinction because many projects promise utility but never see institutional money. HBR is already seeing both. So what does this mean for you as an investor or someone watching crypto closely? It means this is a moment to pay attention. ETF inflows aren't random. They're a reflection of serious market interest and validation. Combined with enterprise adoption, regulatory support, and partnerships with global companies, Hedera is positioned to grow not just in price, but in influence and market relevance. Let's start with the problem Hedera faced. Until recently, HBAR was somewhat isolated compared to other major blockchains. While it had strong enterprise use cases, its integration with other blockchain ecosystems was limited. That meant developers and institutions couldn't easily move assets or interact with applications across chains. In crypto terms, this is a bottleneck. Without cross-chain capability, the potential for liquidity and adoption is capped. Enter Axelar, a cross-chain messaging and bridging layer. Hedera's official partnership with Axelar is huge because it effectively connects HBR to over 60 different blockchains, including Ethereum, Solana, Polygon, Cosmos, and Arbitrum. This isn't just a basic token bridge, it's full interoperability, meaning HBAR can now participate in decentralized finance, DeFi ecosystems, interact with smart contracts on other chains, and access liquidity that was previously out of reach. Why does this matter? Let's break it down. DeFi integration. HBR can now plug into DeFi protocols across multiple chains. This allows users to enter Hedera liquidity pools from other chains in a single transaction, simplifying the experience and increasing adoption. Projects like Saucer Swap and Squid are already integrating Axelar to enable seamless cross-chain access. Institutional potential. With HBAR integrated across multiple chains, institutions can route capital, settle tokenized assets, and manage DeFi operations at scale. This isn't just for retail users, it's about real-world financial infrastructure. Hedera becomes a core layer for asset transfers and liquidity, something very few blockchains can claim. Liquidity growth, cross-chain access opens the door to deeper liquidity and higher trading volumes. More liquidity means smoother transactions, reduced slippage, and a more stable price, which attracts both retail and institutional participants. Developer ecosystem. By integrating with Axelar, developers can build on Hedera while leveraging assets and applications from other chains. This makes Hedera a more attractive platform for innovation, accelerating ecosystem growth. In short, the Axelar integration removes HBAR's isolation and positions it as a bridge between enterprise-grade blockchain utility and broader crypto ecosystems. Think of it as taking Hedera from enterprise blockchain to fully connected financial infrastructure. Another key point, this integration also has price implications. News like this acts as a catalyst because it shows that HBAR isn't just a speculative asset, it's building real utility. Traders are already reacting to this kind of news, and over time, cross-chain flows could increase demand and adoption, which historically can have a significant impact on price momentum. Finally, this positions HBAR for long-term growth in DeFi, asset tokenization, and enterprise applications. By connecting with Axelar and other ecosystems, Hedera isn't just competing, it's becoming an essential infrastructure layer. When you combine this with ETF inflows, FedEx adoption, and regulatory alignment, the picture starts to look very compelling. Let's start with FedEx, one of the largest logistics companies in the world. FedEx didn't just choose Hedera randomly. They joined the Hedera Council because they see trust and reliability as central to digital supply chains. Traditional supply chains rely heavily on paper and middlemen, which slows everything down and introduces errors. Hedera's technology allows companies to digitally track shipments, verify information, and share key data across multiple parties in a secure and neutral way. That's a huge upgrade from anything in the past. Next, we have PwC, which is partnering with Hedera on enterprise implementations. This means we're not talking about experiments or proofs of concept. These are fully regulated, real-world solutions that help companies comply with legal and operational requirements. For example, the EU is mandating digital product passports by 2027. Every product sold into its market must have a digital ID that tracks origin, materials, and lifecycle data. Hedera's track and trace solution is designed specifically to power this system, anchoring all the information on a distributed ledger to prove compliance. That's exactly the kind of enterprise-grade utility that institutions value. Think about the implications. If a company is shipping goods globally, Hedera allows them to automate compliance, verify authenticity, and prevent fraud all in real time. This is not only efficient, but also reduces costs and errors. Hedera is providing a platform where trust scales. That's why enterprises, regulators, and investors are all starting to pay attention at the same time. Another angle is Hedera's role in the Crypto Council for Innovation. The CCI includes major players like Coinbase, Fidelity Digital Assets, and Block. Being part of this council gives Hedera a direct line to lawmakers and global regulators, which is rare for any blockchain. This means HBAR is positioned where policy and regulation are being shaped, helping ensure that innovation continues without being blocked by restrictive rules. In addition, Hedera's alignment with the Global Blockchain Business Council, GBBC, further strengthens its enterprise positioning. The GBBC connects Hedera to major institutions, governments, and corporations, supporting enterprise-grade distributed ledger technology, DLT, adoption worldwide. By being part of this ecosystem, Hedera benefits from strategic partnerships, shared knowledge, and credibility that smaller or newer blockchains simply don't have. All of this shows that HBAR isn't speculative fluff. It's being integrated into systems that global businesses and regulators will rely on for years. When companies see real utility, when regulators approve frameworks, and when global supply chains digitize at scale, HBR gains a unique market position. This isn't hype. It's practical adoption that can influence price, liquidity, and long-term investor confidence. Finally, let's tie this back to you. If you're looking for crypto projects with real-world applications, regulatory compliance, and institutional interest, Hedera checks all the boxes. It's building the kind of infrastructure that will be used for decades, not just for short-term speculation. And that's why understanding enterprise adoption and regulatory use cases is key. You're not just tracking a token, you're tracking a foundational layer of global commerce. First, let's talk about Quant and the Global Blockchain Business Council, GBBC. Quant acts as an orchestration layer for distributed ledger technology, DLT, connecting external services and blockchains. Hedera, on the other hand, provides the enterprise-grade DLT infrastructure. When you combine Quant and Hedera under the GBBC ecosystem, you get a fully integrated solution that's ready for global adoption. These partnerships aren't just marketing, they're strategic moves to standardize enterprise blockchain technology worldwide. Hedera also recently completed major technical integrations, including with LAR and Axelar, which expand its ecosystem significantly. The LAR integration hardwires Hedera into 60 different chains, giving institutions the tools to route capital, settle tokenized assets, and participate in DeFi at scale. Axelar adds cross-chain messaging and bridging, enabling developers and users to access Hedera's technology from other blockchains with a single programmable interface. This is a major leap for liquidity, interoperability, and real-world usage. Why is this important? Because integration drives adoption. Developers are more likely to build on Hedera when it's connected to multiple chains and when liquidity can flow seamlessly. Institutions are more likely to invest when capital can be routed efficiently across ecosystems. And the market responds when both developers and institutions see clear utility and growth potential. Another example of Hedera's strategic partnerships is its collaboration with enterprise giants like IBM and Bank of England advisors through the GBBC. These relationships provide guidance, credibility, and real-world testing opportunities. Hedera isn't working in isolation. It's part of a global network shaping the future of blockchain and enterprise finance. We also need to highlight Hedera's role in tokenized real-world assets and DeFi infrastructure. By connecting with multiple blockchains and enterprise systems, HBAR can now serve as a backbone for payments, asset tokenization, and smart contract execution at scale. This positions Hedera uniquely among cryptocurrencies. It's not just a coin, it's a full-scale financial and regulatory ecosystem. The technical implications are equally powerful. Hedera's integrations reduce friction for developers and users, allowing smooth cross-chain transactions without complex bridging. This strengthens HBAR's market position because liquidity, adoption, and transaction volume can grow organically and sustainably. In other words, Hedera is setting itself up for long-term relevance and scalability, not just short-term price spikes. Finally, strategic partnerships like these send a clear signal to investors. HBAR is here to stay, and it's being positioned for real-world impact. Unlike other projects that are purely speculative, Hedera has institutional backing, enterprise adoption, regulatory alignment, and technical robustness. This combination creates one of the strongest foundations for growth in the crypto space. Let's start with the big picture. HBAR is no longer just a crypto token. It's an integrated enterprise and regulatory platform. With FedEx joining the Hedera Council, PwC implementing enterprise solutions, ETFs showing strong inflows, and cross-chain integrations via Axelar and LAR, the ecosystem is positioned for long-term adoption. The combination of institutional support, enterprise utility, and technical interoperability sets the stage for sustained growth rather than short-term hype. From a market perspective, ETF inflows are a clear signal of institutional confidence. Seven-figure inflows and consistent net buying activity suggest that HBAR is being taken seriously by professional investors. When you combine this with Hedera's ability to connect with other blockchains, it creates a network effect. The more liquidity and adoption HBAR sees, the more valuable it becomes as a token for both investment and enterprise utility. Cross-chain connectivity is another major driver for HBAR. With integrations into 60-plus chains via LAR and Axelar, HBAR can now access liquidity, DeFi applications, and tokenized assets from other ecosystems. This makes it far more useful and attractive for developers, institutions, and retail investors. For example, users can now enter Hedera liquidity pools from Ethereum, Solana, or Polygon in a single transaction, significantly increasing adoption potential. Enterprise adoption continues to provide a strong foundation. The EU's digital product passports, FedEx's trusted supply chain infrastructure, and PwC's regulatory solutions show that Hedera is solving real-world problems. This utility not only validates HBAR as a token, but also positions it as a critical infrastructure layer for global trade and finance. When real-world adoption meets cross-chain capability, we're looking at a rare convergence of factors that can drive both demand and price. Looking at technical partnerships, integration with Quant, GBBC, and other major institutions highlights Hedera's strategic positioning. These collaborations ensure that HBAR is not just a token for speculation, but a core part of future financial infrastructure. It's rare to see a blockchain with both institutional credibility and developer adoption at this scale. This is exactly the type of setup that historically precedes significant price growth over time. So, what does this mean for investors in 2026? First, HBAR could see increased demand from institutional funds, ETFs, and cross-chain DeFi users. Second, enterprise adoption will continue to expand, providing a steady, real-world utility floor for HBAR. Third, market awareness and strategic partnerships could position HBAR as a foundational token for tokenized assets and cross-chain liquidity, driving both adoption and long-term price appreciation. In short, 2026 could be a breakthrough year for HBAR, where the token moves from enterprise-ready to widely adopted in both institutional and DeFi ecosystems. Early investors who recognize the once-in-a-civilization opportunity, like we discussed in Part 1, may see substantial benefits. To wrap up, Hedera's story isn't just about price speculation. It's about technology, trust, adoption, and strategic positioning. From ETF inflows to FedEx partnerships, cross-chain integrations, and regulatory alignment, HBAR has all the pieces in place for long-term growth. If you've been paying attention, this is a rare opportunity to participate in a blockchain that's truly being used by the real world. That's it for our deep dive. Make sure you like this video, comment your thoughts on HBAR, and subscribe with notifications on. We'll continue bringing you the latest updates, insights, and analysis on Hedera, XRP, and other crypto opportunities right here on We Are Cosmic. Stay informed, stay ahead, and remember, the future of finance is digital, and HBAR is right at the center of it.